Bitdeer locks in 400 M offtake for half its Malaysia. AI data center, Bitdeer has locked in a buyer for roughly half of its new Malaysia data center before the site is fully built. According to a post from CoinMarketCap on August 21, 2026, the company's AI arm signed a 5-year offtake agreement worth about $400 million, covering close to 50% of the facility's capacity. And it is targeting 350 megawatts of AI cloud capacity at the site by the first quarter of 2028. The deal is a supply contract, not a construction milestone. An offtake agreement means a customer has committed in advance to buy a fixed block of the data center's output, in this case AI compute, for a set period. Signing one before the building is finished gives Bitdeer a revenue floor for that portion of the site and reduces the risk of pouring capital into racks that sit idle waiting for demand. A Bitcoin miner keeps reweighting toward AI. Bitdeer built its business on Bitcoin mining, and that heritage matters here. Miners run large fleets of specialized machines inside power-hungry buildings, and over the past 2 years, many of the largest operators have discovered that the same core assets, cheap power contracts, land, cooling, and grid connections, are exactly what AI compute customers are scrambling to secure. The Malaysia contract is the clearest kind of evidence that Bitdeer is treating AI cloud as a primary product line rather than a side experiment. The 350 milliwatt target by Q1 2028 sets the scale. Power capacity is the honest unit of measure for this kind of infrastructure because it caps how many chips a site can actually run at once. Committing half of that capacity years ahead of the deadline tells you Bitdeer is confident enough in demand to sell first and build into the contract. The offtake structure shifts who carries the risk. The 5-year length is the part worth sitting with. Long contracts pull demand risk off the operator and hand a chunk of it to the customer, who is now on the hook to pay for compute whether or not they end up using all of it. In exchange, the buyer locks in guaranteed capacity in a market where GPUs and the power to run them have been chronically scarce. That trade, certainty for commitment, is why offtake deals have become the standard financing lever for large compute build-outs. For Bitdeer, a signed floor on half the site makes the rest of the project easier to fund. Lenders and equity investors look more favorably on a data center that already has contracted revenue attached to it than on one betting entirely on future bookings. The remaining just 50% of capacity is now the speculative slice, and how quickly the company fills it will say a lot about whether the 2028 target holds. The details Bitdeer has not disclosed yet. The single-source announcement leaves real gaps. The identity of the customer is not stated, and that matters because a hyperscaler, an AI lab, and a smaller reseller each carry very different credit and concentration profiles. The 400 figure covers about half the capacity over 5 years, but the split between fixed payments and usage-based pricing is not spelled out, and neither is the ramp schedule between now and Q1 2028. Treat the headline as a confirmed commitment and the economics as pending until fuller terms surface. Location adds another layer. Concentrating $350 million of AI infrastructure in Malaysia ties the project to the country's grid capacity, its power pricing, and its posture toward energy-intensive computing, all of which have become live policy questions across Southeast Asia as data center demand climbs.